What's going on, everyone? The market just dropped like a rock. There's no bounce in sight, no beautiful opportunity for people to load back up on shorts. I was wrong. We didn't bounce on Monday. Regardless of the stats, the 85 to 90% chance, none of that mattered. And I'm going to go ahead and explain a bit more of why I think what the next steps are for the market and give you guys a bit of a better backdrop of what is happening in the economy as a whole and what that means for the stock market in general. All right, so without further ado, let's get started with the video. Number one, all eyes are on CPI data coming out this Wednesday. I feel like a lot of it is priced in, but a lot can still change. Regardless, that doesn't mean that the SPY can't fall back down to 390 to 393. So this is a chart of the SPY, and clearly at the moment we are at historic weakness, right? And I told you guys that this would be the worst case scenario for price continuing to go up. This is September of 2020, all right? And essentially, this red candle would be Thursday. This would be Friday. I showed you guys that if we didn't bounce, this would basically be Monday, which was today. So if we are going by this, especially since we had major weakness in the market in general back here in September as well, the next day would be a bit of a bounce. And it makes sense that we would have a bit of a bounce prior to CPI data. If we don't bounce tomorrow, if tomorrow's not green, holy crap, that would be insane weakness, because this is probably one of the weakest that I've seen for the market. But I mean, anything could happen at this point. Like, there's a lot more to look at, and how you see the SPY currently, right? It makes sense in terms of price action, how there would be a bit of a bounce, not like a huge, reversal upwards, right? 405 is going to be a major level of resistance. That's going to be a pivot point. So if we break above 405 and close above that level on the SPY, sure, that can give us room back up to 410, 415. That's completely fine. But then once we break back below 405, back to bearish, okay? And sure, I mean, we could have a bounce. That doesn't really mean anything at this point. So I want to show you guys something else as well. So these numbers came out recently. The Federal Reserve reports consumer debt levels for March 2020 climbed by more than 52 billion. Revolving credit, which includes credit cards, surged by more than 21%. Officials said those credit card bills are likely going to be harder to pay off because interest rates are also expected to rise. And I believe these numbers are up 200% in a year. So people are using record numbers of credit, and they're using record numbers of credit card debt, right? But they're not paying for regular goods and like things that'll help boost the economy and confidence in the economy. They're using it to buy gas and food. So that is not a good sign, especially, showing how much inflation is. And because of these numbers, so we can see that consumers are using the highest debt in history. But because inflation is high, it's causing the financial sector. And you can also see, the IWM is down 4.21%. It's the biggest loser because the IWM has, banks and financial stocks in the ETF. So what they're doing is they're issuing a bunch of debt to people, and there's no guarantee that these people are going to be able to pay the debt off. And because inflation is so high, it's causing an issue to the bottom line of these banks. So it's really, really bad. So in general, with this weakness in the economy, and because the economy currently is so fragile, if oil begins to fall, and if in general, this is really, really bearish for for the economy as a whole. There's a lot of different things, a lot of moving pieces currently at the moment, and all of them look very, very terrible for the long-term outlook of the market, for the economy. So in terms of the stock market, things don't really look that good either. Immediately, this level looks like it's on the table very easily. 405, 400. Yeah, we can bounce back up to those levels, but again, these are good levels to go short against. And also, the Fed can't really do much. The only thing that they can really do is once the stock market falls much lower, they'll begin quantitative easing. But then the quantitative easing won't really solve the recession problem. It won't fix the macro issues that are going on in the economy. It'll just cause growth and like the stock market in general to go up. But until we see some positive things coming out of this the economy, and until the Fed starts quantitative easing, this is straight up. This is bear market. This is because the fact that we didn't bounce today was a very slim chance, but the fact that we didn't was it's very, very bearish. So what I do think is going to end up happening is we're going to pivot off of that 405 level, make another low, make another 2 legs down, and once people are comfortably covered their shorts, even below 390, then we'll start talking about 390, 385. But you also have to take into consideration that retail on huge red days like this, there is a lot of selling going on. And when there's a lot of selling and fear in general, many people become bearish. So when there are days like this, when the majority of people were thinking that we were going to bounce, and the majority of people were hopeful of a bounce, the next day it's very easy for people to become extremely bearish. And then that is the exact thing that causes whipsaws. When you allow the market, and when basically you become reactionary to what the market is doing, that's how you lose your money. So what we saw is in September, we should technically be bouncing tomorrow. If we don't bounce tomorrow, then sure. But intraday, we just have to essentially... So, for example, today what we saw was the market was very choppy, right? As levels of support were broken, trying to go short on these levels of support, usually that's supposed to work. But what they were doing, especially today on days of choppiness, people went short on breaks of support and they brought it back up to resistance, causing everyone that went short here to stop out. And then from up here, they brought the market down. So on days of choppiness, you have to buy puts at resistance or during consolidation. That is the best time to buy puts. When there's especially no momentum to the downside. And conversely, to the upside, if there's no follow through on the up or the downside, you have to buy calls at support or during consolidation. That's the best time to buy calls. So tomorrow could be a green day, sure, but we could also be a red day. Either way, you have to see how the market follows through on levels, on breaks of levels of support and resistance. And until we get clear, first of all, we need to close above, we need to start breaking above 400 intraday for us to think that the market's going to be green. Until that happens, then maybe, sure, congratulations, we can hit 405. But again, guys, I cannot stress enough how bearish this move today was and how bad for the economy things as a whole look. All right. So expect more downside in the next month or two. The next month or two we can have a lot more downside for the next month or two until the Fed starts to do some QE. Until then, until then, sure, we could technically bounce off of shorts, but just be careful about going super long of anything. All right. And yeah, man, if this weakness continues for the rest of the year, a lot of people are going to write off a lot of losses. All right, so here's a chart of the SPY. We can see that we broke down 400 after huge downside moves. The RSI is still not oversold, and the MACD is barely crossed down lower, which is absolutely terrible, which means that there's a lot more room to the downside. And we can see that it's trading outside the B band. That is not a reason to go long at the moment. Doesn't really mean much. We could look at the futures chart for the SPY as well at the moment, and you can see that yes, we closed outside of the B band. It looks like we're opening inside. So this lower B band is vomiting to the downside. It looks like it's basically just free falling lower. So it's going to be much harder for there to be an overextension to the downside on the SPY. All right. Now, also, we can take a look at the NASDAQ. The NASDAQ also similarly closed very far outside of the B bands. The RSI is not oversold yet, and the MACD very similar. All right. This is very, very bearish. We should easily see 393, then 390, and easily see this 283 level as well in the next few weeks. But you have to take into account that there are going to be bounces. Do not go overly short into the hole. Go short at levels of resistance. Don't get emotional. Don't overburden yourself on any positions. Especially don't hold anything overnight that you're not willing to risk losing. It's much easier to scalp intraday. And if you are going to hold anything overnight, you should probably be holding short. So, yeah. So there's that for the Qs, right? We can take a look at the futures chart. Very similarly, the Bollinger Bands are just absolutely vomiting here. So you can see that we opened inside the Bollinger Bands, which is really, really bad because we closed very far outside. Yeah, we're opening inside, which is showing the overall weakness of the market. It's showing that the lower standard deviation away from 20 exponential moving average is just vomiting to the downside. So there's no real reason to go long just yet in terms of the overextensions to the downside, because we need to open outside of the lower bands for us to, that would be the extreme. But yeah, currently it's not really the extreme. We can see that the RSI is flat. We had a bit of a green day and it caused the RSI to become flat. That is not bullish because it means that the RSI is very sensitive to this price movement at the moment. And if that is the case, any sort of bounce that we have, unless CPI data just blows it out of the park, any CPI data, any upward movement that we have is going to continue being an amazing shorting opportunity. But do not short extreme weakness. Wait for a bounce and then short, or wait for levels of resistance and then short at those levels. But yeah, it's a good sign that we see the MACDs falling very sharply. But aside from that, the NASDAQ looks really, really bad. But in general, it would make sense for us to have a baby bounce similar to what happened in September 2020. And then let's take a look at the IWM. The IWM clearly closed the most outside of the Bollinger Bands. It's the closest to being oversold on the RSI. It's at 31. The MACD is falling much lower, which is great. Now, when taking a look at the Russell or the Russell futures, it looks like we're opening outside of the lower bands for now, which is a good sign because that is basically extremely overextended to the downside. And God damn, this is so bad. The RSI is flat also on this. So basically the reason why I think it's very, very bad is because when the market is barely showing any sort of bullishness, really, really just a baby bullish move, that should not be causing the RSI to show like a flat level of strength. So that's how I perceive it. And it's just very, very bearish. So again, any touches of these levels of resistance is going to continue to be shorting opportunities. But if we have like some time in the morning to scalp upward momentum, that'd be great. But currently this is overall very, very bearish. Overall, the economy is taking a hit. Not the best sign. All right. So now let's quickly take a look at the crypto market. So obviously, if you signed on to Coinbase, you're not very happy. But one of the good things about what's going on right now is Bitcoin opened very, very far outside of the lower Bollinger Bands, which means that we should see a move back inside. And you guys know that when we open outside of the lower B bands for the SPY, the NASDAQ, or the IWM, it means that there should be a retracement back inside. And seeing as Bitcoin follows the overall stock market as a whole, I'm assuming that the same algorithms and everything also are trading Bitcoin in the same way. So it would be very interesting now to see how Bitcoin responds and if we can have a very nice green candle retrace back at least inside the Bollinger Band, which would be at least 31.5. We have to see like how what level basically the price updates to, but currently it's at 31.7. So we need to see if we can retest into 31.7 today. If that's the case, that should also fuel somewhat of a green move in the stock market. But in general, we broke down below 30,000. We could bounce back up to 32.5, but again, that is going to be a key level of resistance. So we just have to see how the market responds. But when we are at extreme overextensions to the downside like this, that is probably the only time to go long at this point in the market. And let's see how Bitcoin can respond here. We're extremely oversold on the RSI as well. The MACD is just vomiting lower. There is just a whole wall of momentum falling down here. So we need to see if that momentum can continue moving forward. And it looks like it will. So we could also take a look at Ethereum. Ethereum also opened outside of the lower B band very, very clearly. Luna, one of the biggest winners, capitulated the hardest. It's it's up 10% for the day because we are very, very overextended. But it's not a guarantee that with these smaller coins that the Bollinger Band thing will work out. More so, it's very important to see how Bitcoin responds. And yeah, essentially, there's that. Bitcoin is making a bounce. The stock market in general should make a bounce. Lots of weakness overall. But we can see that the lower Bollinger Band is falling extremely fast on Bitcoin as well. The whole stock market looks bearish. But overnight, we should have a bounce. We should be a bit green tomorrow. We should close green tomorrow. If not, that would be pretty amazing. In general, overall momentum is bearish. Lots of bearish things going on in the stock market. Lots of bearish things going on the macro level as well. If you guys enjoyed the video, make sure to like, comment, subscribe, do all that good stuff. Thank you so much for all of your support. I really appreciate it. And of course, have an amazing night. I will see you guys tomorrow. Thank you.